In one of the most volatile years on record, we are seeing a story split in two. Depending on the information you acknowledge, stocks are looking weak, the economy is struggling, and the fear of contagion is very high. If you choose to ignore reality, there are a handful of statistics that look quite modest. But you didn't want to be lied to, did you? That's why you came here for the truth, so let me unveil that for you. Today we're going to look at several charts, so many in fact, it's going to make your head spin. So have a seat and take a look at this. Beginning with the markets, I did a video during the day. It was about 400 points down at that point, and I brought the video out. I said, I don't know where it's going to be at the end of the day. Well, the plunge protection team went on an early vacation because the market ended up falling by 500 points on the Dow Jones. All of the US markets ended up in the red. So you're looking at this right now, and why the case was today was a number of things, but all of them really shouldn't have pulled the market down by 500 points. Right now, what you can see is that this is extreme volatility that is not showing up on the garbage VIX index, and we're going to talk more about that in a moment. Stocks broke key level and could aim for the year's low. The S&P 500 broke the psychological 2600 level and closed at a lower low, setting the stage for a possible retest of a new range above the 2018 low of 2532. We're going to see what happens right now on the S&P and the other US markets. These are the technicals that they look at, and of course, nothing is really predictable these days. There are a whole set of possible events that could push this down further. There are a few events that could push it up much higher. We were told that once this whole trade truce was in, that the market was going to rocket higher. It didn't happen. It happened for about a few hours, and then suddenly everything changed. I think that there should be reasons to have the stock market growing. Maybe there's reasons to have it shrink, but not 500 points. We haven't seen a reason for the market to come down so drastically and then the next day it goes up so drastically. Those type of behaviors are from a market that is nothing but worried. It doesn't mean that it's all calm and maybe there's gonna be a problem, there's uncertainty. Markets don't fall by 2% in a day because of uncertainty. It would fall just a little bit and the next day would maybe come up just a little bit. Things are way out of whack, and I have an article to talk about in just a second on that. The Feds meet in the week ahead, and strategists are watching how the market trades after that meeting, which could be a pivotal event for the market. And absolutely, it is so pivotal. It's critical to see what the Federal Reserve is going to do. It's not just about what they're going to do at that moment, if they're going to increase or not, though I do think that is really crucial. It is important to understand about their forward guidance. What are they going to do in the coming months? Are they suggesting that they're going to increase anymore, or are they going to say, well, you know what, we're gonna wait and see. We did this one, but for the next ones, we're gonna wait and see. We're gonna go slow. If they tell the markets they're gonna go slow, the market's gonna love that. If they say, you know what, we might really just do it again and again, that is going to piss off the markets, I'm telling you right now. This is the most volatile year on record, and one strategist sees wild moves sticking around. You can read the description. This individual here from Credit Suisse had a few things to say, but all I wanted to point out was the fact that she agrees with me. The VIX does not represent reality. Instead, what you should look at are the options, and these are basically suggesting to individuals that in the coming months, we are going to have volatility. That's what it's telling us, and guess what? Isn't it so convenient that the Federal Reserve, and possibly others too, have a massive short position on the VIX? Could it be that the VIX is hiding the truth, reality? Oh, just perhaps. Who knows what else they're up to, but every little piece of data that I can bring to you, I will do so all the time. If you want to know how I know about the VIX and you're not aware of this, the Fed meetings, they are released after a period of time, and it was, if I'm not mistaken right now, Powell that actually spoke on this and said, we have a short position on the VIX. It was his own words, but this is from years ago, okay? I did an entire video about that previously, but it's escaping me at the moment, but definitely they do have one. I covered it. I proved that, and everybody knows it by now, I'm sure. I'm now going to cover several charts. I'm going to go one after the other, beginning with this. Global systemically important banks today are getting severely beaten. They are in a bear market, and if you look at this index, it was at peaking around 155, let's say. This is at the beginning of 2018, along with everything else. It has declined to a level currently, as I record this on Friday's trading session, 103. This has been beaten down so severely. And what are these global systemically important banks? Well, these are the too big to fail banks. These are the too big to bail banks. We're talking about the Deutsche Bank. We're talking about literally all the names you know of, the ones that are literally too big to bail out, the ones that got bailouts in 2008. These are the ones that are literally the worst possible banks, investment institutions, financial corporations that exist today, not just because perhaps they've used fractional reserve banking like they all do, not because they got into a little trouble behind the scenes, but because of the derivatives exposure being bigger than any country in the world. If that starts to unravel, you will have a collapse greater than we have ever seen before. And I'm not saying that it will happen. I have no idea. But what I can tell you is that what we saw in 2008 was a preview, and I believe, my opinion, a foreshadowing of what will happen the next time around. This was very, very clear, very obvious that those in the financial system were not prepared for the mess that unfolded. They saw it firsthand. They did nothing in order to stop these weapons from being created. And so we only have compounded the problems from then. It's not resolved. People think to themselves that there are more regulations today. For example, they say, well, you have to keep more reserves now. The banks are more secure. That is true. That's true. But it's still at a level so low that every bank is at an extreme risk. For example, if they say the reserve ratio was 3% before and now it's, let's just say, 10%, 10% is not enough. You should need to have 100% if you're a bank. You can't get away with 10%. It's not going to work, and that's the fractional reserve banking. What about the derivatives? How can a company that has a market cap of, let's say, $100 billion, how could it have $50 trillion worth of derivatives? That doesn't make sense. How can you ever allow that to be created? This is an institutional disaster. They've created companies that are so big that they could, not only are they too big to fail, but they are too big to bail out. I have to make that very clear. Now you have the situation, I didn't even do a video about it yet, but I should, about how they want to combine these two monstrosities of Deutsche Bank and Commerzbank into one. And how do you do that? How do you get away with creating this monopoly? How do you get away with creating a company so big that it's even worse in this situation? And what do? You have a crisis. You create the crisis and you provide the solution. They want to have one big nationalized bank, and that's what they're getting at. There's going to be something huge that takes place in the near future. I gotta stop ranting. Take a look at this. S&P banks are looking very bad right now. They're in a bear market. Also, the S&P financials are in a bear market, going back to levels we haven't seen since September of 2017. The global systemically important banks are back into levels we haven't seen since 2016. All right, then we look at the European banks. This is constantly up and down since the financial crisis. It has not been able to achieve its previous high, anywhere near it. In fact, we are looking at all throughout 2018, basically with all other stocks, having declined month after month after month. Europe is totally under pressure right now. Where do you want to start? You look at the Brexit scenario in the UK. You look at what's happening in France. What about Brussels too? It's spreading over there. Look at Germany, down significantly. What about Italy? They're hurting as well. I'll show you a chart on that. Looking at this, these are the European banks, and this is actually one of the worst years for European banks since the financial crisis. That's all it's showing here, the different years. That's truly unfortunate for not just these banks themselves, not just for the bondholders, not just for the shareholders, but individuals who are going to definitely lose their job as a result. This is the European banks over this course of this year, and every time they gain just a little bit of steam, they're pushed down down heavily afterwards. And it's because of everything that's happening right now, where we're looking at all of the different situations that have arose throughout 2018, whether it's Italy's government, whether it's happening in Germany and so on. That's that. Then you look at Italy all share banks index suffering over and over and over again. They looked to be maintaining their level from January all the way up until May, but since then it has been a disaster. They thought the new government would be a wonderful thing, but it hasn't really resolved any issues because of the power which exists over their head. Now they seem to be not exactly fond of the EU, but the EU is still putting pressure, and that it is having an effect on their stock market. S&P 500 rare bout of selling pressure. This is the drops of greater than 1.7% intraday at least 4 days in a row. Last time we saw this was during the financial crisis. Previous to that was in the year 2000. We don't normally see this. Yes, it does happen on occasion here and there, but we are seeing significant drops in a row. It's not just a one-off scenario, but I'm looking at this happening over and over and over again. All sorts of volatility that has been present, and this is just an example showing us in the S&P 500. Now, the fourth quarter of 2018 pace of downgrades from A to triple B territory is the largest since late 2015 wave of commodity-related fallen angels. You're witnessing the downgrades occurring right now. It doesn't matter where we look at it, but you can see different corporations, different bonds, and different financial instruments that are being punished as a result of what is happening in the world throughout 2018. 2015 was a bad year. In fact, if you look at China, if you look at other markets around the world too. However, it wasn't sustained. So it was looking really weak. Then the ECB and I believe the BOJ, maybe the BOE also just ramped up the printing presses, and they did so in order to get the stimulation happening. Then we supercharged it. We went into 2016, 2017, everything was looking fantastic, but the steam ran out. 2018's been a terrible year as a result. This year, we're talking about the plunge protection team. You know about it, all right? It is not a thing that I made up. People question me on that, but it's literally the plunge protection team, and you can see when it was created and everything. But regardless, you have the plunge protection team. You have what's happening with the Bank of Japan. They don't even beat around the bush at all. They are simply manipulating their markets. And then you have the national team in China. All of these countries are manipulating their stock markets, their bond markets, their real estate markets. You're seeing that now in Canada. But this is Saudi. Now, Saudi pumps up stock market after bad news. This is talking about complete expose on when Saudi intervened in their markets. If you want to look at the whole thing yourself, definitely check out the article. They're very descriptive. They get into the details of it. I think it's interesting. I just don't have enough time to cover it in this video, so I wanted to bring it to you. The link will be in the description of it to check out for yourself. So that's that, and I just wanted to bring this to you simply to let you know that all countries are doing this. All countries manipulate, or else they would fail. And that doesn't really sit well with me. It doesn't sit well on the level of the fact that I'm going to put my hard-earned savings into these banks, into these financial institutions, and I have to rely on their manipulation to keep them up. Doesn't sound real safe and secure to me. That's all for this video. If you found it informative, then I know you'll find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. These two books have everything you need to know about the financial system, how to manage your money, how to ask the right questions, and you can check them out at the link in the description. If you want the audiobook, that's at themoneygps.com.